you think the market is mispricing this risk?
Well, I think the market is sort of looking over it, right, and saying that this is going to get worked out. And I think that's probably the I would say the majority case, right? It's 85% probability that things do get worked out because they always have. I'm always somebody who looks at, okay, well, what happens if it doesn't? And what's the pain associated with that? And, market's not pricing that in today at all. And I think, there's a possibility that they don't get it done or don't get it done in time. And so, a lot of work to be done still.
So where do you want to be right now if you have to hedge that risk? How do you position?
So, I think you have to have some liquidity available. Like you need to be in a position where if there is a dislocation in the market, or if this gets extended, which is kind of our base case at TD Cowen, is our base case is that they probably can't get it all worked out, and this is really just about the budget going forward and deficit reduction going forward, which are two big issues that just can't get worked out in a matter of weeks. So the base case that we have is that this gets kicked until October, when you can have a much broader conversation about how you're going to deal with some of those bigger issues coming into the presidential election year. And if that's the case, we're going to have a summer where we're just going to sit here and talk about it for a long time. Pros, cons, puts, takes, tax hikes or spending cuts. And the last time this happened in 2011, market was down like 17%. When we got anything that sort of close to that situation. And, I just don't think that's great for equities. So you got to kind of prepare for that eventuality, too, if it doesn't all get worked out here to raise the limit beyond sort of October.
Although, Jeffrey, some also say, well, what if we do get a deal and the market has to wrestle with the austerity with that less government support brings to the economy, and what happens to the markets in that case?
Yeah, I think there should be less stimulus coming. I mean, we just came off the greatest stimulus in the history of stimulus. Like it's what we've spent in the last 3 years. By the way, and I was on board with that. Like I think we needed to be able to do that, certainly at the beginning of the pandemic, to tie people over. But maybe we did a little too much, and we got inflation. Maybe rates were a little too low too long, and we got inflation. And the Fed has to deal with that. We have to deal with that. So, I think at the end of the day, if we end up with discretionary spending a little lower, that's probably not a bad thing. I think the delta, by the way, I think it's really interesting. Like, people don't focus on this, but 89% of the federal budget is not being really hotly debated, right? Yep. Entitlement programs are not being debated. Defense spending is not being debated. It's the 11% of the market, 11% of the budget that is sort of really being debated, that discretionary spend. And, the Republicans want to cut it by 50%. I think that's probably not reasonable. That's in real terms. And the Democrats want to increase it by 4%. Again, there's a trade to be done in there. And I think we have to figure out how that gets done. And it should get done, because the pain associated with that probably is too great to bear.
Yeah. Well, hopefully, maybe we'll get some guidance from the president on that in a few moments. As for the banks, I wonder if you think they have effectively re-rated. And if now we can stop talking about a ban on short selling and maybe even end a discussion about FDI insurance, and this Western Alliance update with more frequency seems to be comforting. How are you feeling about that?
Yeah, listen, we have a thing in this country where we do value regional banking as a business, right? And so I think there's been a few people that have published that maybe the regional banking model is broken. Like, I don't know, it's too early to say that. What I will say is that it's definitely a dampener on the economy. So if you're running an asset liability, committee, you're definitely a little more concerned about going out on the liquidity spectrum or the duration spectrum, particularly if we just learned that deposits have shorter duration. So generally speaking, I think it's going to be a dampener as maybe credit comes in from some of these places, at least until things get worked through. So, it's too early to say. I don't think we've seen the end of regional banking or community banking. It's way too valuable to Main Street, and from a political standpoint, I don't know that anybody here has the intestinal fortitude to see that go away. I think we just understood exactly how the federal government feels about it, and so people will adjust their business models, but in the near term, I think it's a definite dampener on economics. And by the way, okay with that, right? Because we've got to make sure that inflation doesn't get away from us.